Welcome back to the Stock Guy Analysis. All right, let's get right into it. We're going to pull back the curtain on a really interesting move by one of Wall Street's absolute giants. A move that was clearly never meant for the headlines. We're going to break down what they bought, why they bought it, and what it could mean for a tiny, tiny corner of the crypto market. You know, there's this old saying on the street, and it is so true. The biggest, smartest moves, they're not announced on cable news. Nope, they're buried deep inside these quiet, kind of boring regulatory filings that, let's be honest, most people just completely miss. And that right there is the big question for us today. Why on earth would Vanguard, the second largest asset manager on the planet, suddenly take such a massive interest in a little company with the ticker BMNR? Let's follow the money trail. Okay, so first things first, our investigation, our whole starting point, it isn't some market rumor. It's a single crucial document, our primary clue that something really unusual is going on behind the scenes. And that document is called a 13F filing. Basically, this is our only legal peek inside the portfolios of giants like Vanguard. It forces them to show their hand every single quarter. And, you know, usually it's pretty dry stuff, but not this time. And here it is, the core finding. The latest filing shows Vanguard didn't just buy a few shares. They went on a massive shopping spree, accumulating a huge position in BitMine. Now, this isn't some passive index fund tweak. Oh no, this is an active, aggressive, and very deliberate move. So, we know they bought, but the real question is just how big was this move really? To get the full picture, we have to look past the public numbers and dig into the true scale of what they pulled off. And frankly, the details are pretty wild. Okay, so the public filing that shows about 2.88 million shares. But that's not the whole story. See, when analysts add in the data from what are called dark pools, which are just private stock exchanges where institutions trade huge blocks away from the public eye, the estimate just balloons to a staggering 4 million shares. And you have to understand 4 million shares in this context is absolutely massive. BMNR is a small company. It doesn't have billions of shares floating around. By soaking up this much stock, Vanguard has pretty much cornered a huge piece of the entire available market. So a move this big signals two things loud and clear. First, high conviction. You do not make a bet this size unless your models are screaming that the bottom is in and the risk is low. And second, strategic timing. They got in before any big positive news broke. They're positioning themselves way ahead of the curve, which brings us to the motive. I mean, why would a behemoth like Vanguard make such a concentrated bet on a tiny company? Well, the answer isn't about what the company was. It's all about the massive pivot they're making right now. And this chart just perfectly lays out the change. The old BitMine, that was a classic Bitcoin miner. You spend a ton on electricity, you get a coin, you sell it to pay the bills. It's a tough, low-margin grind. The new BitMine is becoming a yield-generating machine through Ethereum staking, passively earning ETH just for helping to validate network transactions. It's a whole different ballgame. And the engine behind this entire shift is a project they're calling MAVAN. This is the catalyst. This is the core reason that big institutions are suddenly snapping to attention. It represents a move from just speculating on crypto prices to actually earning from the crypto infrastructure itself. And that really gets to the heart of it. Tom Lee, a well-known analyst, connected with the company. He gets it. Institutional money loves yield. If Bit can generate consistent reward from staking ETH, they could be in a position to offer the first ever crypto dividend on the NASDAQ. Think about that. A regular, predictable payout that would attract a whole new class of conservative investors. And it looks a lot like Vanguard is trying to get in line before that happens. So let's zoom out. How does this one company story fit into the bigger crypto investment picture? Because this isn't just about BMNR. This could be about a fundamental rotation in how big money gets exposure to crypto. A shift in strategy that might just define the next cycle. For the longest time, MicroStrategy, MSTR, has been the main game in town for playing crypto on the stock market. Think of it as a Bitcoin gold play, a leveraged bet on the price of one single asset. BMNR is trying to become Ethereum oil, a bet not on the price, but on the infrastructure that makes the entire network run. It's about earning a small fee on every transaction, kind of like owning a toll road. It's a completely different and maybe more stable way to play the space. Okay, let's put all the pieces together. Now, we have a massive motivated buyer. We have a company pivoting to a new, very attractive business model. So, what happens when you combine that with a super tight timeline and even tighter math? Well, you might just get a supply shock. The math here is actually incredibly simple, but the result is powerful. You take all the shares that exist, you subtract the shares that insiders hold because they aren't selling, and then you subtract the 4 million shares that Vanguard just took off the market. And what's left for everyone else to buy, the free float, is, well, it's dangerously thin. And this is where the calendar becomes absolutely critical. January 15th, you've got the shareholder meeting. That's where news of a potential dividend could drop. Then you have January 30th, which is a projected date when this supply crunch could really hit its peak. Now, this chart, this shows something called days to cover. All that means is it shows how long it would take for investors betting against the stock, the short sellers, to buy back all their shares. A high number like this means they could get trapped. If good news hits and the stock pops, they're forced to buy back at any price, which can create a massive short squeeze. This is what analysts call a liquidity crisis. When everybody wants to buy at the same time and nobody is selling, the price has to jump, sometimes violently, just to find a seller. The source material used a great analogy for this. The price doesn't just climb, it teleports to a whole new level almost instantly. And the key technical level that everybody's watching is right around $36 a share. If the price can punch through that resistance level, it could trigger a huge wave of automated algorithmic buying, which would just add even more fuel to the fire. So, at the end of the day, we're left with this one big question. Is this Vanguard filing a clear hidden signal that the smartest money on Wall Street sees a huge fundamental shift happening here? Or is this just more noise in a very speculative market? The data is out there, but the conclusion, well, that's one you're going to have to draw for yourself. Thank you for watching.